figure we still have a few people trickling in, but we can actually go ahead and kick this thing off. I'll go first. My name is Shakia Kegler. I'm a commercial real estate agent out in South Florida. I work with small business owners to help them locate spaces to buy, lease, and if they already have spaces, help them sell as well. And I'm super excited to be here today. And I have two amazing guests. I know if you caught the episode last week, Tamika was on and she gave us the entire rundown of South Florida commercial real estate from her experience. And now we have another guest. So we have Alex, who's going to be on here telling us a little bit more about himself as well. And we're just here to learn together. So I'm going to let Tamika go ahead and take it away.
Hey everyone, my name is Tamika Moses. I'm the broker owner of Robin Bird Realty. My business is primarily commercial and single residential investment properties. And I'm just looking forward to tonight. I work with small business all the way up to larger businesses throughout the state and outside the state of Florida as well. So I'm looking forward to Alex giving us so much knowledge about SBA loans, because I always have clients that are asking me, can I obtain our SBA loan to actually purchase a property? So I am excited to hear all of the things that Alex is going to tell us about tonight for SBA loans.
Wonderful. So I guess thank you for having me again. I guess let me tell you a little bit about myself. So I'm the principal of Equitas Capital. We're a commercial lending advisory firm. We're based in New York, but we work all over the country. We do very substantial amount of business in Florida and in South Florida. And a little about me. This is going on my 18th year in commercial lending. So yeah, it's definitely a long time. Let's kind of put it that way. But always very excited to share some market intel, some market data, as well as explain how different financing programs work. This is what we do day in and day out, and we know that there's a lot of I guess you could say misperceptions of how this works and why this works. So I guess whenever you're ready, let's get going.
All right. So actually Tamika's ended up dropping off a little bit. So I'm going to go ahead and add her back. But definitely excited. 18 years. I don't know if this is a conversation where experience rings bells, but funding for 18 years. So imagine how much money he's helped business owners and investors obtain to purchase commercial real estate over 18 long years. Well, I'm going to say long like that.
Definitely long years.
We're just going to say 18 years.
You can throw the long part in there. It's definitely been a long 18 years.
No, but definitely. So we wanted to kind of go ahead. I'll hit it off with the first question. And it is, what is the difference between an SBA loan and a conventional loan in the commercial space?
Sure. So SBA loans are loans that are issued through banks in various forms, but ultimately the loans are guaranteed to the banks by the Small Business Administration. So it's a U.S. government program. And, they've always been around. We always get that question, how long has this program been around? It's always been around. And those loans are ultimately guaranteed by the Small Business Administration, and they're designed to help small businesses grow, right? And the first one on the list is, how else can a small business grow? Where they buy property for themselves and ultimately will operate out of the property. So I would say, rule number one is, and this is a hard line, where whatever property the business is buying, they must occupy 51% of the total property square footage. So if I buy that,
let me stop you for a second, Alex. Did you all hear that? 51% of the property. Go ahead. I want people to hear that.
So, if you buy a 10,000 square foot warehouse, your business must occupy at least 5,100 square feet. Okay. And that is actually the rule across all commercial lending when it comes to owner occupied commercial financing. Very, very important to know, because we get this question pretty often, that in owner occupied commercial lending, your business, not you personally, have to move into the property. Your business must occupy 51% of the total square footage. And The SBA program, ultimately with guarantees from the U.S. government, will let you finance up to 90% of whatever property you purchase. Now, that is also some adders to it, meaning that if we need to add, let's say, build-out cost or working capital cost, those could actually be figured into the capital stack as well. So, I like to use, a nice round example. Let's say you buy a property for $1 million and you need, $200,000 worth of renovations. We could actually finance 90% of $1.2 million. The only caveat there is that the property, factoring in the cost of renovations, must appraise for $1.2 million.
Okay.
And, in our experience, usually if the properties are priced accordingly, then appraisers will be somewhat lenient, factoring in, the scope of renovations. We'll have to provide like a budget. And providing a budget, it will ultimately usually come in line. And that is actually one of the major differences between SBA and conventional financing. So the 51% rule, that's the master, ruler of the universe kind of deal. That goes for conventional and SBA. Now, with conventional financing, here is the requirements. So first of all, the business must provide 3 years of financials. And for qualifying purposes, the business must show that based on its net income, not top line income, net income, the property can carry the obligation of the mortgage, taxes, and insurance every year. And let's say the business does demonstrate the financial wherewithal to carry it, then ultimately it will require anywhere from a 25 to a 20% down payment.
Huge difference in SBA loan.
Absolutely.
Yeah.
And, I'm a big proponent that, SBA for small businesses as they grow and, buy property, I think that's the best game in town.
Oh, wow.
Absolutely the best game in town. Because, with conventional financing, as I just mentioned, and commercial banks, it's really a zero-sum game, meaning that your business must show the historical financials to demonstrate that they could carry the obligation. The good thing about SBA is that it's not a zero-sum game, meaning it's not all or nothing. Meaning that if you have, let's say you do have the 3 years financials and you do demonstrate the ability to pay the proposed obligations year over year, then you will just qualify for a tier 1 SBA lender. And tier 1 SBA lenders, what they really bring to the party is it actually offers a 25-year fixed product.
Oh, wow.
That's one of the only commercial fixed rate products where you could lock in an interest rate for 25 years. And, 25 years in, you're done.
Oh, wow.
Very, very simple and straightforward.
Yes.
But it's not, remember I said it's not a zero-sum game. So let's say a business could only demonstrate 1 out of 3 years, right? Or maybe not last year. Maybe they'll show it for 2022 on a profit and loss statement.
Okay.
Then there are tier 2 SBA lenders. Of course, pricing increases from tier 1 to tier 2, but it is absolutely viable and possible to still get your 90%, 95% with build out and so forth. It's definitely on the table. And then tier 3 SBA lenders, which obviously are going to be the most expensive priced loans, but they can work off of financial projections. They can technically finance a startup. Okay.
That's what I was about to ask.
So that's very much on the table. Okay. So, let's say you've been in business for a year and conventional financing is not an option. SBA is absolutely the game. And even within SBA, I would say we can really get even more granular. So there's 2 types of SBA loans.
Please explain.
Everyone really needs to understand. So there is a SBA 504 loan and there's an SBA 7A loan. So the SBA 504 program is specifically designed for real estate acquisitions for SBA. And the way the capital stack works is, a lender, a bank, will provide the first 50% financing. And the lender, the way we work with, multiple lenders, and obviously that's a shopping game, whoever's going to provide the most aggressive terms for the respective deal. Okay. The 40% that comes from SBA actually gets underwritten by something called the CDC, which is SBA's local presence in every state.
Yes.
And you technically go through double underwriting. where the bank and the CDC will run the process concurrently, do the underwriting concurrently, and then after appraisals and engineering inspections are complete, then they'll actually cross paths and kind of take you to the finish line. So the capital stack in that instance is 50% bank, 40% SBA, 10% borrower. Okay, that's the capital stack.
Okay.
And the 40% that comes from SBA, you could actually choose either a 20-year fixed or a 25-year fixed.
Oh, wow. You got choices there.
Absolutely. And that basically boils down to how aggressive any respective borrower wants to be.
Okay. Now I have a quick question.
Please.
We have a lot of people, I know a lot of people on this live, they're probably a brand new business and they're thinking, leasing is extremely high right now, price per square foot. So if they were to come to you and say, hey, I want to get an SBA loan, what do I need to have? What documents, how do I make this work for my business and me to purchase a real estate property, a commercial real estate property?
So one thing that I really like about, my industry is that we really start to dive in and really understand the client's business, right? Because the inner workings of that business ultimately will determine, how viable it is for SBA. So I would say absolutely having a very strong business plan. And it's not just about the story, it's also about the projections. Okay. So SBA always would like to see at least 2 years of projections. The first year, month over month, and the second year, accumulative total. Okay. And then based on the business plan and the financial projections, that will help as SBA and us and the bank determine the viability of a certain business, right? Certain industries are obviously substantially stronger than others, right? For example, healthcare, right? Healthcare is kind of the ivory tower in my world, right? Doctors could get whatever they want, whenever they want, however they want. And that's because, it's such a stable industry, meaning that, COVID, people go to the doctor. Not COVID, people go to the doctor. Doctors make money in good and bad. In 2008, the doctors made money, right? So doctors are kind of almost a sure thing when it comes to banking. Okay. Other industries, could be considered higher risk, such as, restaurants, those kind of businesses. Those are higher risk. So what it really boils down to is it ultimately boils down to if it's a newer business or a business has been a year in business. It ultimately boils down to who the person is behind the business, who's the owner, what's their experience in the industry, how long have they been doing it, how comfortable are they operating in the immediate market where the business is or where they want to buy property. And if that checks out and, the business plan makes sense and the projections are there, then absolutely there could be financing for them.
Oh, wow.
Yeah. Now, I'm happy you brought up financial projections. So prior to this, I was in the startup world. So going through writing a business plan, the pitch decks, the financial projections, I did all of that. And I was like, I'm never going to use this again. And now that you say it, I'm like, oh, okay, so I probably will use it again.
It's all circle already. It all comes back.
It's all coming back because I'm using it right now for a couple of clients. So it is really all coming back.
And listen, it's, some industries are, a little easier than others. Some businesses are just very cookie cutter, right? I need X amount of space for any quantity that I make or whatever they make. Let's say I always like to use child daycares, right?
Yeah. Oh, that's a big.
That's a very easy, at least to me, it seems like a very easy business to scale and quantify, right? Every state, Department of Education, Department of Health, they have their own requirements for children, right? A kid from 0 to 3 needs X amount of square feet. The next age group needs X amount of square feet. Each age group requires a certain amount of teachers. So it's, just multipliers, right? I have a 10,000 square feet. I could fit X amount of kids in this age group, X amount of kids in this age group, and so forth and so forth. And then you just, multiplication, right?
Exactly.
So very, let's say, fairly easy to quantify. So that's how the 504 product works, okay? Now, the 7A product. So the 7A product is, technically this product could be designed for business operations without real estate. So if a business is in expansion mode and they want to go get a line of credit or they want to get some working capital, that's absolutely what 7A loans are used for.
Okay.
And in addition to that, that could also be used to buy commercial real estate. Now, that's already, which product to choose, it's really in the eye of the beholder, because the process itself is also a little different. Where on the 504 side, you go through double underwriting, where you go through underwriting through SBA and the bank at the same time. With 7A loans, those loans are usually done only by the bank. Now, the SBA still guarantees the full boat, but everything is done in-house by the bank, okay? And it has its advantages, it has its disadvantages, right? Like everything in life. So I would say the biggest disadvantage is that all SBA loans have something called an SBA funding fee. It's almost like a little insurance policy that the SBA takes out for every loan, meaning that, God forbid, things go off the tracks, the U.S. government is never going to lose money, right? So they will absolutely always recoup. The same way, as a lot of people don't know, but SBA requires life insurance. So, and the SBA is going to be made the beneficiaries, meaning that if, God forbid, something happens to you and you're the brains behind the operation, then the SBA has, the ultimate safety net, which is your life insurance policy.
Exactly.
That's number one. Number two is SBA has a maximum exposure in either product, 7A or 504, of $5 million per business. Okay? So the max a business could borrow from the Small Business Administration is $5 million. And the trick there is that if you have a business that's really in, fire growth mode, then when you take a 504 loan, remember I said the 40% that comes from SBA?
Yeah.
So you're only using 400, let's say $1 million scenario, 500 from the bank, 400 from SBA. So when you take a 504 loan, only the 400,000, the 40% will go against the 5 million SBA exposure. And that SBA insurance premium or funding fee is also based on that 400,000.
Okay.
On a 7A loan, you will pay the insurance premium on the whole 90% that comes from one bank. So you're burning more SBA exposure. That's number one. Also, number two is that that SBA funding fee, the guarantee fee, that is also based on the whole 90%, not on the 40.
Okay.
So it's a little more expensive loan.
Exactly.
But SBA 7A loans become really aggressive when you have to go to tier 2 and tier 3 SBA lenders, where since only the bank is doing their own underwriting, they're usually a lot more forthcoming and flexible when it comes to working with projections. So if your business doesn't hit 3 years of historicals, right, or your business, is a startup or needs, growth projections, 7A loans are a lot more lenient when it comes to that type of financing.
Awesome. So let me ask you something. I know that a lot of people, because you're giving some great information. I know people are really taking notes. We're seeing a lot of requests to actually save this information. Let me ask you something. Is your personal credit a factor of any of these SBA loans as well?
Yes, absolutely. So, I like to use the same analogy, and I hope everyone on the stream will understand. So I like to compare commercial and residential, right?
Yes.
So ultimately, if you go buy a residential property, right, and I want to buy a house for myself, then, if the entire transaction is from 0 to 100, then 80%, 85% of the equation is based on me, right? You guys are realtors, so your credit, your income, your bank statements, don't buy a car, don't look at a credit card, just basically sit home for 3 months and don't do anything, right?
Exactly.
God forbid. and everybody decides to buy a Mercedes, right before they close on the house, right? Because what else can you park in your driveway except a Mercedes, right?
Oh, yeah, like you need a Mercedes in a new driveway.
I know.
Of course.
Brand new furniture, so yeah, that happens.
And so me personally, 85% of the equation. The property is 10 to 15% of the equation. And as long as the property appraises, and as long as the property is in livable condition, then the property kind of does its end of the bargain, right? So in commercial, flip-flop it.
Okay.
Where I care either about the property, if this is investment, commercial real estate, or I care about the business. Because the business is the primary guarantor that's going to be responsible for the debt obligation. The person behind the business owner, and, in commercial, any partner of a business that has more than 20% ownership must provide all of their financial information.
Okay.
Credit score does matter, but again, it's somewhat fluid. 660, 680, fine, right? But if it's a 660 or 680, we need to know why it's a 660, 680, right? If they have, they haven't paid bills for the last 6 months running and their credit score is 660, then that's an issue, right?
Yeah.
If it's kind of a one-off thing or something happened, a year ago or 2 years ago and their credit's kind of ramping on its way up, then ultimately, you'll kind of meet its end of the bargain, okay? Now, personal income, it's not a very major factor, but I always like to tell everyone, you got to be able to pass the smell test. Now, if you show personal income of, 70, 80, $100,000, fine, right? As long as it covers your. But on the, when it comes to individual people behind the business, think of it this way. If I show $40,000 on my personal income tax returns and the bank runs my credit and you have a $7,000 a month, primary housing payment, that's just not right. Okay. And then they'll start asking 10 trillion questions. But as long as the overall financial profile of the borrower, the human being behind the business, makes sense, it kind of does its end of the bargain.
Okay.
Now, on the flip side of that, as we're like, talking about residential and commercial. So let's see how I frame this. On the residential side, you were supposed to go to the bank first to get pre-qualified or pre-approved. Is it the same on the commercial side? Should I go, who comes first? Now, like that chicken or egg situation. Is it the lender or is it
exactly
the property?
Yeah, should I come with you with the property and say, okay, this is the property. I want to buy this property. What do we do?
So my personal philosophy, I like to be very preemptive than, reactive, right? I guess that kind of makes sense. So we tell clients all the time, it's very important to get vetted up front, right? Commercial pre-approvals are a little different than residential, right? Residential, they'll kind of give you a more, broad pre-approval. If I make $300,000 a year, I'll qualify up to this. So with commercial, it's different because with commercial, we care very much property by property, okay? Now, when it comes to a business owner, we always like to review their financials beforehand, right? See what their numbers look like, see certain things that we could put back to their bottom line, such as, for example, a lot of business owners write off depreciation. Depreciation is it's a fluff IRS loophole where, they depreciate down their assets. Now, banks understand this is a paper loss. It's not a viable loss. So if, my bottom line is $100,000, but I wrote up $100,000 of depreciation, we could actually put that back to your bottom line. So your net income is not 100 anymore. Now it's 200. Okay. For example, a business is currently paying rent, right? If you're operating business, banks understand that, once you buy a property, there's no more rent. And that rent will also, that you wrote off on your tax returns, will actually be put back to your bottom line. So whatever number you really show as, net ordinary income on your tax returns, that's not necessarily going to be your qualifying income for loan purposes. Now, we always like to be preemptive, review financials of the business, make sure that, there's no inconsistencies and things like that. And once we could kind of get a sizing of the business overall, then, we'll tell them, these are the types of properties you should be looking for. But you guys are the realtors, so you're the experts. So you know that, it's a little different when it comes to commercial because, you could have one property that's going to have $20,000 in taxes, or you could have another property that's going to have $100,000 in taxes. And that will ultimately impact, a individual's borrowing ability. So we kind of give them at least the ballpark. And then once they go property by property, then we're able to tighten the screws, and say this property taxes are fair, this would work. This property taxes are too high, it knocks the numbers off, might require 5% bigger down payment, or, maybe go look for another property.
Okay.
But at least we have a very thorough, base understanding of what they could ultimately qualify for. And then it will make your life easier because when you do go show them properties, it'll take us 30 minutes to update our models, just plug in some property specific information and we'll get an answer within the hour. as compared to, collecting the tax returns, reviewing the tax returns, reviewing the property, which takes a day or two. This way you could cut that time frame down to 30, 60 minutes.
Okay.
Now that is amazing. We did have someone to ask, would you be able to explain the depreciating assets?
Qualifying income.
Yes.
And,
Correct.
Yeah.
Correct. So IRS code, assets of a business do depreciate over time, right? Let's say you're, I don't know, a manufacturing company and you bought equipment, right? Every year that equipment basically costs less, right?
Mm-hmm.
So good accountants are, very spot on with this, writing off depreciation. So, the way that banks look at it, because for purpose of our conversation, our primary collateral is the real estate, right? So that's what gives the bank the comfort. That's what helps them sleep better at night, that they know ultimately their collateral is a commercial property. Now, when accountants write off depreciation, it's the loss of value of business assets, but it doesn't impact business value and it doesn't impact overall business cash flow. Okay, it reduces tax liability. So when an accountant will write off $100,000 of depreciation, we know that that's still a physical asset on the company's books, and that money will be put back to the bottom line.
Okay.
In the person's favor.
Okay, I have a question. The 51% rule that you were discussing, say a 10,000 square foot building, you say, okay, the business is a primary property for the business. They have to occupy 51%. So what if that whole 10,000 square foot building is vacant? With the other 4,900 square feet, say for instance, is a shopping center and it's vacant. So will we do a projection of how much those rents will go for and then put it into the income, or how do we calculate that?
Sure. So if a business is not going to occupy the entire property themselves, having additional cash flow is nice.
Yes.
But it does not do much for qualifying purposes.
Okay. Just want to make that.
Correct. Because let's say the SBA, for purpose of this conversation, ultimately lends to the business.
Okay.
And the business must show and demonstrate the ability to carry the obligation, whether there is a tenant or whether there is no tenant. Okay. Tenant's kind of the icing on the cake.
Exactly.
But whether they're there or not there, it doesn't matter.
Yeah, I wanted to clarify that because I know that's only what they flip side and do on a residential from 1 to 4 units if they calculate the rents or what a potential rent. So I want to make sure of that as well on the commercial side. Okay, awesome.
Absolutely.
Now we did have another question. I'm going to go ahead and pop it in here. And it says, can you both see it? Can you speak on the underwriting guidelines for buying a commercial property with 7A loans?
I'm sorry, repeat that, please.
Can you speak on underwriting guidelines for buying a commercial property with the 7A loan?
Absolutely. So, the first thing we go to are historical business tax returns and financial statements. And we basically, run through the mill, income minus expenses, certain expenses, like I mentioned earlier, like rent, we put back to the bottom line, depreciation, we put back to the bottom line. Listen, if there were one-time major expenses, right? Say a business bought a huge piece of equipment, right? They don't buy these things every year. So, it's kind of evaluated on a deal by deal with a grain of salt, right? So let's say, maybe their bottom line isn't stellar this year, but because they bought a $500,000 piece of equipment. So we could exclude that as a one-time anomaly, right? So we get to the bottom line. We know that the company made $120,000 a year, $125,000 is the net true NOI. And then all commercial loans, whether owner occupied or investment, are based on an underwriting criteria, which I'm sure everyone knows, is debt service coverage ratio. And the debt service coverage ratio currently for SBA loans is 120, 125.
Yeah. Okay.
Which means, you know what I'm referring to.
Mm-hmm.
So net operating income, which is your true bottom line, divided by the annual mortgage payment, gives you a coefficient. So the magic number is 1.25 times. That's the secret sauce.
Yes.
So if your business shows a bottom line $125,000, that means that the annual mortgage payment cannot exceed $100,000 for the year. and you divide 125 by 100, 1.25 times. That's the math.
You all got my calculation, simple calculations, commercial real
Very,
estate numbers.
very simple.
The numbers game.
Purely a numbers game, absolutely. And also, guys, just so you know, in commercial world, on the residential side, things are looked at on a monthly basis. What's your monthly income? Everything we do in commercials on an annualized basis.
Okay, we have another question. Someone is asking, is there a maximum loan to value in DTI?
So loan to value is up to 90%. Like I said, it could go higher if we finance in renovations or working capital and so forth. But personal debt to income doesn't really matter for SBA loans. As long as your overall financial profile, like I said earlier, merits what you're trying to do, then we care primarily on the cash flow of the business. Don't be that person that shows $40,000 on their personal income tax returns, but has a $10,000 monthly mortgage payment. Then DTI really matters.
Yeah, it has to make sense.
Absolutely.
One more.
Let's
see. So this one is, do they finance churches?
They want to know whether or not you finance churches, or are you the bank or the broker?
Yes.
Sure. So that really boils down to the banks that we choose to work with, whether 7(a) or the first piece of the 504. All commercial banks charge a bank fee, origination fee, which could vary anywhere from 0 to 1% of the loan amount that they provide. These, in every commercial transactions, there's always commercial appraisals are done. Commercial appraisals could cost anywhere from $1,500 to $15,000, maybe more, right? It depends on the size of the deal. It depends on the property, the complexity and so forth. All commercial banks will do a phase 1 environmental study. Make sure the property has no environmental contaminations, no oil tanks, no spills, none of that stuff. That could run anywhere from $1,500 to $3,500. In addition to that, every commercial transaction has a commercial bank attorney. Commercial bank attorneys, depending on the state and the firm and so forth, listen, they could charge $3,500. They could charge $15,000.
Yeah.
Right. It ultimately depends on the on the transaction.
Yeah. Complexity of it.
With respect to the FHA funding fees, those guarantee fees, it's about low 2%, like 2.25%, something like that. And that could technically be financed into the loan, so they don't have to lay that money out of pocket.
Okay. That's another key point. Key fact. I know a lot of people are taking notes tonight.
Sure. I'm over here writing like crazy.
We could do a recap.
Yeah, definitely. So that's perfect. I like that. And I'm noticing that you can basically factor in a lot of the cost in the actual loan amount. And I think that's something that's completely different from anything that I've seen on the residential side as well. Just factoring in basically literally all of the costs. You even mentioned the funding fee being something that can be added into that. And I know even when we purchased our home and used the VA loan, we initially had to pay that fee that comes along with that. So I think that's a huge aspect of, or a huge component of this.
In my analogy, so the SBA funding fee, you could think of it as the FHA funding premium or the VA funding premium, basically same concept. The U.S. government will never lose money on a deal, so they're going to insure the hell out of it.
Exactly. I have a quick question. There are a lot of business grants. A lot of cities are giving one in particular, and down here in Miami, they have that Miami Foundation grant where they're actually awarding businesses that are located in Miami-Dade County up to $500,000 towards a commercial property to purchase in one of the inner cities. It can be Liberty City, Overtown, wherever. So how does SBA and those grant programs work hand in hand? Because I have a client that I'm working with right now that are getting that may be potentially getting some of those funds, but I know they also said they have to be SBA pre-approved ready. So how does that coincide together?
So the type of grant that they get is extremely important, right? And is it really a grant? is that have any, hidden strings that it has to be paid back. Okay. So for example, remember PPP?
Yes.
So those were grants, right? Those were all forgiven. So the banks didn't count it as a liability, but a lot of banks also, the rule was to include it into your corporate income. A lot of banks deducted it from your corporate income because it was a one-time anomaly, right? The second correlation were the COVID EIDL loans, economic disaster loans, right? Everyone got some, right? I think it's a great deal, a great product. It helped a lot of people out. Was it like $375 for 30-year fixed?
Oh yeah.
Now, if you do have loans, the loans are fine, right? The EIDL loans, for example, are fine. However, two things. Number one, and it's just funny to say. So the EIDL loans will have to move into second position behind the bank. It's called a subordination.
Okay.
And especially when you buy property with SBA financing, it's usually a pretty quick process. Like 2 weeks, you submit your paperwork, and they'll be happy to slide, down the hierarchy scale to go into second position. But when we do our underwriting, if someone does have an EIDL loan, those payments are factored in as a liability into their cash flow.
Oh, okay.
So we will underwrite that as a liability. And, remember that 1.25 magic, debt service coverage ratio number? They must hit that same covenant carrying the obligation of the EIDL loan. Awesome
information to know. There may be some business owners who have the EIDL and don't think they can go back and go utilize the SBA and say, hey, I can go utilize this loan as long as they second position and they're able to show the debt coverage ratio. That's awesome.
Yeah, absolutely. As long as they could show that they could carry the obligation, no question.
So we have another question. Oh,
that's it.
Can mixed-use properties utilize capital on their outdoor spaces for general public use? Is that, I guess they're asking basically, does it cover the building and the outside spaces, or just the inside of the building? So
it does, but as long as it makes sense for your business, absolutely it does. We recently financed a SBA 7A loan for a company that's car detailing.
Okay.
And they bought a huge warehouse in New York, and the property had other tenants in it. They bought it with the tenants. And we really needed to use that outdoor space to hit our 51% because I care about the entire property in a whole. Now, for a auto detailing business, outdoor space is just as important as indoor space, right? Because if they're working on servicing 50 cars, they got to put them somewhere. Absolutely. Right? So that's just as important. So that absolutely counts, right? If I have a bakery and my bakery could only occupy 20% of the building, but I'm going to say I'm going to use the outdoor space, you really need to explain how you're going to use it and how it's going to be, applicable to your business.
Yeah, I was going to hop on that. As soon as you said you utilize the outdoor space, I'm like, wait a minute.
Exactly.
Listen, it works for, guys, it works for a lot of businesses, that was just one example. We financed a laundromat where, they keep, those industrial, God forbid, drums of cleaning supplies. They don't keep it in the building, they keep it outside the building. So it's, viable space. A lot of doctors use it, when they have like special zones for loading and unloading patients.
Of course.
So it really depends, very specific, business by business.
Okay. There is another question I see. Is there a seasoning on down payment funds? Is there a seasoning requirement?
So SBA would like to know where the money's coming from.
Okay.
Now, but we got to be very forthcoming. So we consider clients' money as money, meaning that, if they have money in their personal accounts, that counts. If they have money in their business, obviously this is being bought by the business, so that absolutely counts. And then, for the trifecta, of course, gift funds could be utilized.
Okay.
Got it. So you can also utilize gift funds. Now, this is actually going backwards a little bit because I know we kind of passed it beforehand, but going into you said you can get a quote in terms of how much you can get between 30, like you can get a quote within like 30 minutes to an hour. Is that how long it takes to get like the loan secured? How long does it take to get us a loan secured? Okay.
No, that's the pre-approval process.
Gotcha. Okay.
So I guess let me take a step back. It's actually a great question. So I guess let me tell you how my company operates, and then what the time frames are for different kind of loans. So we like to be extremely proactive. So once we collect all the business financials, we will analyze and underwrite them ourselves. And because we do this day in and day out, we have a pretty thorough understanding of bank underwriting guidelines, what to look out for, and how to get them pre-approved. Now, once a client actually goes and finds a property that they like, as they kind of go through their due diligence period and go through legal, what we do is we actually package up our credit memos and we send it out to multiple different lenders that we work with. And once a bank's, once the banker and their credit department will ultimately review a credit request, then if they like the deal and the numbers make sense, then they will issue something called a lender term sheet.
Okay.
Now, what that ultimately means is, someone in credit did review this. It fits the boxes. Yes, there's going to be, there'll be underwriting down the pipe, but, based on the information which we provided, which is based on, the 3 years tax returns and so forth, this lender is willing to give you the following proposal. And a term sheet could take, from 2 days to 7 days, and that really depends on, which bank, how busy the bank, how busy they are and so forth.
Okay.
But once you get a lender term sheet, that is, that's actually something that really carries some rub with it.
Awesome. So let me ask you something. So once you're under contract with the property, we've submitted all the documentation. How long is the process from start to finish to get from initial application to closing? So people can have an idea.
So it's going to be a little different for 7A loans and 504 loans. Okay. Now, the reason why there's a difference between the two types of loans is because, remember, a 504, you go through 2 underwritings.
Yes.
7A, you go through 1. So usually commercial loans take between 60 and 90 days.
Okay.
So I would say a 7A loan is going to fit into that ballpark of 60 to 90 days. 504 loans usually take a little bit longer. So I would say 75 to 100 days. That's just, and that is not a number that's written in stone. It's just based on SBA's capacity, right? So less volume, they could turn a deal in a week, right? More volume, sometimes it's 3 weeks, right? And that's just an ever-changing number. But I would say for 7A loans, 60 to 90, definitely in the ballpark. And 504 loans, I'd say 75 to 100 days.
Okay. We just want to get an audience a clear indication how long it's going to actually be.
And just so you know, guys, so a very substantial portion of that is third parties. Commercial appraisals today could take 3-4 weeks. Now that doesn't mean the process stays dormant for 3 to 4 weeks. Things do go concurrently, but since obviously the appraisal and the environmental are such important and viable requirements that final decisions will not be made until those reports are in.
Okay, and that's a good one. I'm gonna go ahead and segue into this next question, and it's asking: is there a minimum amount of time that the down payment needs to be in the account?
So, again, it depends, right? Is the money, SBA would want to source the money.
Okay.
So, where did the down payment come from, right? Usually SBA requests, 90 days worth of bank statements, so 3 months. So where did the money come from, right? And did it come into your personal account? Did it come into your business account? Did the money come in from just, regular business operations? Did you get a gift, right? All these kind of intricacies really are very important.
Gotcha. Okay.
Okay.
And then we have one more question. Oh, go ahead.
No, go ahead. You saw another question?
No, they took it out. They took the question out.
Their mind, huh?
They just went through a commercial appraisal, and I think they were saying it took a month.
It could be. It could be.
Yeah.
Now, there's always the wild card, right? Listen, we know that sometimes there are time-sensitive deals, and the good thing about commercial, a lot of things are negotiable. So, the way that we like to work with banks is, we're very cognizant of spending our clients' money because that's who ultimately pays for this.
Mm-hmm.
Now, if we have a time-sensitive deal, the banks will, put out bids for appraisals and say we get 3 bids and they're 3 weeks, right? Or 4 weeks, but we don't have the 3 to 4 weeks to burn.
Okay.
So, we could offer to pay for an expedited appraisal. And if the client's okay paying, whatever, $1,000, $2,000 more, it's possible to get appraisals back in 2 weeks. Right? So that becomes a monetary thing.
Got it. Okay. And then this is, I guess, to the point of the condition of the real estate property, right? Can you utilize these loans to buy properties that are distressed, or does it need to be something that you can utilize while you are fixing it up?
So SBA could technically finance ground up construction, guys. So if I'm a business.
Wait, I'm sorry.
Game changer. I know.
Could you repeat that again?
Yeah.
Could you repeat that again?
Absolutely. So SBA could technically finance ground up construction for a business. We recently did a deal in Orlando where actually a real estate firm bought a property and from a developer, and then developer stayed in to build them a brand new, beautiful 3,000 square foot facility for their offices. And we financed 85% of that.
Oh, wow.
Mm.
Now, of course, this is a very tough pill to swallow with startups, but for businesses that are established and have financials, absolutely. They could build a building for themselves. They could, and that to answer your question, they could, renovate a building. It depends what they want to do with it, right? Usually the rule is that they need to take possession within 90 days. That's the magic sauce.
Okay.
But if they're doing renovations, it's viable. The bank will know, and the bank could even finance in those renovations. As long as, they kind of get it to where they need to be to operate out of there, game on.
Nice. Oh, yeah, that was definitely a game changer. I did not know you could use it for construction at
Absolutely.
all.
As long as you build a building that you will occupy 51% of, absolutely.
So someone is asking, can you utilize the funds for storage facilities and churches?
So SBA does not lend to nonprofits. So churches are out. And actually, a lot of commercial banks, very few will lend to nonprofits. And that just boils down to, no one's ever going to tell you this, but it also boils down to the publicity, right? God forbid a church goes bust and can't make the payments. No bank wants to be on the front page of the newspaper that they're foreclosing on a church, right?
Sure.
Yeah.
Bad for business. Storage facilities, absolutely. But storage facilities are a thing where, some storage facilities are investment commercial real estate, where I just own the real estate and I lease it to a storage facility.
Mm-hmm.
In other instances, self-storage could be a viable owner-occupied business.
Gotcha.
And, as long as the business could meet their obligations or project to meet their obligations, it should be eligible for SBA financing.
Got it.
And okay, so here's a question that I have. What are some guaranteed no's, like as it relates to risk when going after loans, whether it's an SBA or a conventional loan?
Elaborate when you say what risk.
Let's say we talked about credit. Credit being a certain limit, a certain amounts of money in the account. Also the type of business. Like, let's say I have a e-commerce business and I sell products, t-shirts, things like that.
Sure.
Are there any requirements to where, from industry to credit, from industry to credit to, what are all of those requirements?
Credit, I think we covered, right? So obviously the bankruptcies, no bankruptcies, credit scores we kind of touched on. Industries, okay? So cannabis, absolutely not.
Absolutely not.
THC, absolutely not.
I mean, that's medical. If
I know.
I'm just kidding.
Well, so it is medical
Yeah, okay.
until the federal government recognizes it as medical. No go.
Okay.
Non-profits out.
Really?
Yes. Obviously, adult entertainment out.
Mhm.
Nightclubs primarily out.
Okay.
Let me think what else. Certain banks do have their own credit overlays, right? So SBA kind of has a handbook, and then every bank that kind of plays with SBA, some banks will follow their SBA's rules to the T. Some banks will follow their rules to the T, and then add some of their own credit overlays. So depending on the respective lender, some like we just went in an instance where a company did multi-tier marketing, and even though it's permissible and the deal ended up closing with SBA, this particular lender had a kind of a red line for this type of industry because that was more for kind of consumer protection. But the ones I touched on for SBA are kind of the red lines that you can't really pass.
And generally, that's how most rules are anyway.
Yeah.
The big government gives you this, and you add on top of it.
Correct.
Exactly.
Correct.
Okay. Did anyone else have any more questions? You can go ahead and drop them in that question chat. I know Tamika had a few more questions she wanted to get out.
It's been so much information Alex has dropped on us tonight, and so many things that I learned more about the SBA loans and everything. So, Alex, I just want to thank you again for joining us tonight. You gave us a lot of great information. It's a lot of people on this live. They asked some really, really, really great questions. So I'm just excited about all this information and to pass it on to my clients and to pass your information on to them as well.
Absolutely. Guys, listen, always here to help. Any questions, follow-up questions, you guys want to do a round 2 of this, by all means, would love to.
Absolutely. Even before we close out, I wanted to ask one more question. And this one was around the process of refinancing. So can you get these loans? And I guess when new opportunities come out, will you be able to refinance an SBA loan?
So you could refinance out of SBA. Okay.
Oh, out of SBA. Okay.
Now, historically, SBA has predominantly been more purchase driven, right? Help small businesses buy real estate. Now, everything that's going on with COVID, right? They've kind of loosened up the ropes. There's always been a refi option to refi into SBA, but literally that box was like this big, right? So it didn't really work. But since COVID, SBA has really expanded those loans, such as, if you are refinancing, let's say, a private loan, sometimes people need to transact and buy a property because that's the deal, right?
Yeah.
Got to close in 2 weeks, right? So they go get private financing. So the way that SBA looks at it, if they're coming out of a private loan and there's substantial financial benefit, you're coming from, 10% to 6%, SBA deems that as substantial savings, they'll do it, okay? Instances, it will also boil down to, partner buyouts, right? Sometimes you got to buy out a partner, you could refinance into SBA.
Okay.
Or if you have a loan coming due, right? That's going to be a balloon. That potentially could qualify for SBA financing also. But on the flip side, SBA does run a test for, as I like to call credit elsewhere, meaning that they will actually, analyze the deal if you could get conventional financing on a refinance as well, which you gotta pass those tests across the board to be able to qualify. But it's becoming more and more prevalent. People have loans coming due, all that kind of stuff. So yes, SBA has been more forthcoming to take on refinances.
Now, piggyback on that one. This one is about, so can you have like 2 SBA loans concurrently, or can you only have 1 SBA loan at a time? How does that?
So remember I mentioned that $5 million total SBA exposure. So, your business is in growth mode and you want to go buy $5 million buildings. If your business could carry the obligation, absolutely.
Okay.
Now, also, guys, very important to understand. So remember they said that $5 million magic number?
Yes.
So that's really where SBA could really, the product within SBA really matters, right? Because if you go 7A, then you use up all $5 million of exposure. But
Okay.
if you go the 504 route, remember it's only the 40% that comes from SBA. So technically speaking, total exposure, if we go 504, a business could go up to $12-13 million of debt. Where the bank will give the senior piece and the SBA will give their piece. But since we're only adding up the 40% to get to a total of $5 million for the SBA piece, that's where it really, the 504 product really
really helps.
Yeah.
And it can really help scale someone's business.
Yeah. Listen, sometimes you have a huge business that wants to go buy a $12 million building, and they could get SBA financing. So you could go buy a $12 million building and technically put 10% down.
10% down on a $12 million building. Stop it. I don't believe you, Alex.
We'll show you.
You're making up stuff on here today.
We'll show you.
Goodness, no, I'm just
If
kidding.
the business could carry it, guys. Now, also very important to know that there is something as too big for SBA also.
Okay.
Right?
Please elaborate.
I don't think, if I remember correctly, a company cannot have more than $5 million net income, EBITDA. And I remember the sales can be more than like 50 million or something like that. Because then you'll be deemed too big for SBA.
Okay.
But listen, if you could afford it,
go
give it to you.
Go for it. Yeah. Leverage it. That's why I tell people about leverage.
Absolutely.
Okay. And then the minimum time frame for a business, is there a minimum time frame that a business needs to be in business to qualify for SBA loan? I think we hit that a little bit earlier.
So that's going to boil down to the types of, tiers of financing. Very few industries could go tier 1 with projections. And like I said, that's usually healthcare, more licensed industries, pharmacies, daycares, attorneys. If it's just more kind of to consumer businesses, obviously, in all type of commercial lending, 3 years is the magic sauce, right? 3 years of business.
Okay.
But remember, there's tier 2 and there's tier 3. And tier 3 SBA lenders will finance startups. So technically, one of the most interesting deals that we did a couple of years ago was we financed a healthcare business that bought a building in Pennsylvania. I think it was like $2.5 million. And we ended up getting them, I think, 85 or 90% financing.
Okay.
And the business was technically open 30 days before closing.
Wow.
Now, healthcare, very strong financially sponsors, have been in the industry a long time. Their business plan will make you cry. Their numbers were immaculate. 90%.
There you go.
And that's a startup side of it. All right, Alex. I think I'm ready.
Yeah. I know I'm ready. I'm ready.
No, yeah, I like that. I definitely didn't know. I get a lot of business owners who are just starting out, and they ask basically how can I get money as a startup business? And that's a huge component because you never really see too many opportunities for funding for startups. Aside from pitch competitions, going the traditional VC route, as well as, some grants that may be out there as well. So to hear that you can literally use that as a startup,
listen, guys, it's the U.S. government. Their whole point of existence is to help small businesses and grow small businesses and grow the economy that way.
Exactly.
That's what it's designed for.
Exactly. I mean, the SBA has 3 tiers, so you're going to be able to fit into one of those tiers to get that finance to get that commercial property. That's the great thing.
Absolutely.
Now this is as soon as we say we're gonna hop off, we get more questions.
Sure.
But I want to make sure we get them out. Can the SBA commercial loans be used to buy investment property to house voucher tenants or create affordable housing?
No. So SBA is for viable businesses, like, you know,
Traditional businesses.
buying real estate is not a that's an investment real estate kind of deal.
Okay.
And remember, because he said you have to be an owner occupied, it has to be owner occupied, right? So if you'll be occupied 51% of that space with your business, you may be able to find a way to utilize it, right?
Sure.
Yes.
So
As long as
we have to get
zoning permits.
As long as the zoning permits. Okay. Well, we have that. Again, thank you so much, Alex. I'm going to go before any more questions pop into this chat.
No, come on.
Okay.
Throw on the question.
Thank you so much, Alex. You gave so much great information tonight.
My absolute pleasure, guys.
Can you tell
anything we could ever do
how to
help?
connect with you
Yes,
and reach out to you, Alex?
Please.
Sorry about that.
Sure, absolutely. So we'll share all our contact. We'll share my email. Phone is always best. My cell phone number is 646-637-7510. Best way to reach me. Always here to help, guys.
Someone asked about land for farming. I'm so sorry.
So land for farming. That's actually, there's a couple of different government programs for that. There's actually a USDA product for agriculture.
Mm-hmm.
SBA will finance raw land, but if it's for two reasons. The first one is you're going to build something on that land for your business, SBA construction.
Mm-hmm.
Or number two is certain industries just need land, right? We just financed a large contractor that bought a raw piece of land, had nothing on it, but it's viable for his business because he has those monster trucks, and guess what? You got to park them somewhere. So he literally bought a property because he was paying some ungodly numbers in rent to park his trucks, and now he's going to pay himself to park his trucks.
That's a good one, and I've been thinking about that too, since there are a number of drivers, CDL drivers. A lot of people becoming owner operators of their own trucks. A parking lot, that's a business, right?
Yeah, it's absolutely a viable business, and it could be, you could be operating the business yourself, which makes it owner occupied. You could park your equipment there. Usually contractors, manufacturers, where they have heavy industrial equipment, you got to park it somewhere.
Exactly.
Right? Right now we're financing for SBA actually an exotic car driving experience.
Driving experience?
Yeah, so you want to go, you want to rent the Maserati and drive around in it for a day, you could do that.
Okay.
But it's actually a viable business,
Yeah.
has extremely strong financials, and they're literally buying a piece of land because, again, you got to park those cars somewhere.
And of course, you want to have it to where you can drive around. I saw like an influencer on a private jet that was just parked, and they were taking pictures like, "Oh, I'm on a private jet." So that's becoming a thing. Like a lot of people have been opening up creative spaces where you can go to record content.
Yeah, they had a store like that in Aventura, and then also what Alex was talking about with the driving experience, they actually have that over at Opelika Private Airport. They do the driving experience thing over. They have a luxury driving experience thing over there as well. So that's a big business.
As long as you carry the proper insurances, then it's definitely a viable business.
Yeah, that's a good one. I like that. Okay. All right. And then Alex already gave his phone number, and we just hopped back into it. But that's it. We'll see you all in the next one. Alex, you will definitely be back.
I know, for sure.
Absolutely, guys. Anytime.
Again, thank you so much, everyone. If you have questions, like I said, or you need access to this replay, message me and I'll definitely send you the link. It'll also be on my Instagram profile as well. So yeah, I'll see you all soon.
Thank you, everyone.
Good night.
Have a great evening.
Night. Bye.
Bye-bye.
All right. See you.
Bye-bye.
All right.
Did I do